This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Hello. It's Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And today, I think we have one of the more important shows of our time because the times, they are changing. In fact, that should have been our theme song, the times they are changing. Because today we have three monetary systems. We have metal money, which is gold and silver. I call it God's money. Then we have government money, which is the U.S. dollar. Some people call it fiat currency. And today we have cyber currency, which I call people's money. And that is, Bitcoin, Ethereum, and all that. So the question is, which is the real money today? And what should you be counting on in the future? So this is a show not about today, but about the future, so you can keep your, an open mind on this whole thing. So today we're going to be talking to the infamous Harry Dent. He's an economic forecaster, and Harry has a very unique way of looking at how the economy runs and all this. I follow him all these years. I would say he's been on about 80% of the time, which is pretty good for a forecaster. And then we have Jerry Williams, who is my dear friend, and he and I are old timers in gold. And so some people might call us gold bugs, but I'm a bug on gold, real estate, cash, everything but stocks, real estate. I love the study of money. So I'm going to be listening just as much as you are as to which way is the new money. Is it God's money, gold and silver? Is it government money, fiat currency, the dollar, the yen, the euro, the peso? Or is it cryptocurrency, what I call people's money, a new technology called blockchain or Bitcoin and Ethereum? So today the focus will be on gold because gold is the oldest form of quote-unquote money. I call it gold's money because gold is atomic number 79 and silver is atomic number 47. They're not man-made. But government money is man-made, and Bitcoin is man-made. So there are some very big distinctions. So that's the Rich Dad Radio Show. I want you to keep an open mind. As we have my sweetheart Kim, she's going to be talking about a very important book she read. What is that book?
Oh, when you talk about fixed mindsets, open mind, closed minds, there's a great book out called Mindset, and it's by an author named Carol Dweck. And basically what Carol says is there's two basic mindsets that we all have. We all have both of them, but one is dominant. And one is the fixed mindset. And the fixed mindset says, I am this smart. I was born with this IQ. That does not change. You cannot get smarter as you get older. And their form of success is not making a mistake, not failing. Now, the other mindset is the growth mindset.
Well, they live in right and wrong. This is
it's
right. This
very
is
right and wrong. They have all the answers. They have all the answers. So the growth mindset says, hey, I can change, I can learn, I can be anything I want to be. And their definition of success is if I'm learning, if I'm growing, if I'm, if I'm developing personally.
Open to new ideas.
Yeah. So I got to admit, when I was looking at the cryptocurrencies, I was closed-minded for quite a while. And only recently have I opened my mind, and you and I, Robert, went out and bought some, and now we're learning about it, and now I've gotten just a lot smarter.
Now we're multimillionaires in retirement.
But I had to open my mind because I'm like, what is this stuff? This is crazy. It's out of control. But now I had to open my mindset. So we're asking all of you to keep an open mind because we're going to have a lot of different points of view today.
And the Winklevoss brothers, the twins, they're now the first Bitcoin billionaires. And those are the guys, they claim that Zuckerberg screwed them out of Facebook. So they made it on Bitcoin, which is nice. This is capitalism. So let's start with
We'll see them on the New York corners as homeless in a few.
Yeah. Okay. Calm down, Harry. Calm down. I know you're ready to go. But let me bring up my old friend Jerry Williams. This is the guy when gold is gold. It's the information about gold that I trade on. And Jerry is in the market. He's an old timer like me. We've been in gold for years, and so it's not. There's a lot of people selling gold, but who has the information? So, Jerry, would you take 2 minutes, introduce yourself, and give your experience of gold?
Well, sure. Thank you, Robert. I started in 1973 working as a salesman for a company because I had been buying gold for the year before and making money. And
that's how old we are, because I started in 72 also, when it was illegal to own gold.
And so you tend to be fixated on price. You buy it at 60, and the next thing you know it's 120. Well, wow, am I a genius or what? But the older I get, which does give away my age, the more I'm not so much concerned about price fluctuations as I am about just long-term, long-term wealth. I like to think in gold in terms of real estate you can put in your pocket and take with you. The difference is that if you need to sell it in a hurry, you can.
It's liquid. See, the price, the gold's going to be here tomorrow. It'll be here 1,000 years from now. It'll still be here. But the price will change. And the reason it changes are underlying economic conditions. Why do you think gold's going to go to 3,000, 5,000?
Well, it'll be scarcity. Right now, just the government of China alone is taking off the market an amount equal to all the mining output in the world every month.
Okay, so people are hoarding gold right now.
Governments are hoarding it.
Yes,
our net position, which is strange to admit, is that we have net selling.
Right, I understand.
Why are people selling gold here at the lowest price of the year?
I understand. Okay, so that's what you're looking at.
Well, I can give you 3 reasons right off the top here. Number 1 is they need the money. An awful lot of people are just selling because they have to do this or that or whatever. They always tell me why, and I don't ask. The second reason would be they're going into the stock market, which, again, that's where the positive flow is right now. And the third reason, believe it or not, and people will tell me this, they're putting it into Bitcoin, which just blows me away.
Okay, so and now, before we go there to talk to Mr. Harry Dent, I was listening to Jim Rogers, and he said, he's a technical trader, and so just on technical, that's why he's underlying. He says gold should retrace to 1,050, then he's back in. This was a couple of years ago. And then I was listening to Jim Rickards, and he's saying based on fundamentals of the dollar versus the underlying debt and things like this, depending upon M1, M2, M0, gold should be 10,000. So we have China buying gold, one reason. The technical trader Jim Rogers, although he was with Soros on the Quantum Fund, 1,050. And Jim Rickards of The Road to Ruin, $10,000 based upon his underlying fundamentals. And that's why our guest today is Harry Dent. His newest book is 0 Hour, Turn the Greatest Political Financial Upheaval in Modern History to Your Advantage. But Harry has a unique perspective on gold, and he's calling $400 to $450 gold. So the point here, do you have an open mind or a fixed mind? So, Harry, I'm going to take the muzzle off. Why is it going to 400 or 500?
Okay, first of all, you talked about money. Gold was classic past money. Present money is fiat currencies around the world. The future money is likely to be cryptocurrencies, a bottoms-up, like you said, people's transaction created, and I am waiting for that. I hate central banks. Gold was great, but gold cannot keep up. What he said before, gold is scarce. We're growing, and the world economy is growing at 5% long term. Gold production is going up more at 1% to 2% at best. It cannot keep up. It wasn't effective money in the past. It's not effective money in the future. And present fiat currencies are not effective because governments keep manipulating them, which the gold standard used to prevent them from. So I'm into standards. I just don't think gold's it. Gold is a commodity. Number one, commodities go up and down with inflation and scarcity, like 70s, where we had low productivity, high inflation. Guess what was one of the best things you could invest it in? Gold and silver. Now, no. We're in a deflationary commodity. We've had the greatest bubble boom in history where everything's been overproduced, overinvested, over in debt, low interest rates, government stimulus. So that's why we're going to have a bubble burst and a collapse. And guess what? Gold was one of the greatest bubbles. It went up more than the stock market, 7 to 8 times between 2001 2011. Now that bubble is collapsing because gold is an incredible and perfect inflation hedge. I've got a chart back to the 1700s on gold. If you adjust it for inflation, it goes nowhere, like real estate. The difference is real estate throws off rents. Gold does not. It is not a deflation hedge. And we're in a deflationary period. Why have governments printed $12 trillion? Why did the gold bugs think we're going to have hyperinflation with $12 trillion unprecedented money printing? Because they think that's going to cause inflation. All this money printing is fighting deflation, debt deleveraging, bubble deleveraging.
I agree 100% with you. See, everybody, please listen. People get excited about the price going up or price. I don't care what it is. Remember, there was Beanie Babies for a while, and the price of Beanie Babies went up. In the year 2000, it was the dot-com bubble. name was pets.com and all that stuff, and people were betting on all that stuff, and people were going nuts. And today it's Bitcoin and the cyber currency. So, Harry, what is and I agree with 100% that it's inflationary versus deflationary. If you're talking deflation, you're talking about depression, aren't you?
And you're talking about every bubble deflating, every debt leverage thing. The cryptocurrencies, Bitcoin today, is exactly not like just the tech bubble from 1995 to 2000. It's like the internet bubble that only came in the last year and a half, and went up 7-8 times in a year. This cryptocurrency is the last stage of this bubble. Guess who's buying Bitcoin? It's not the institutional investors and the smart money. It's everyday people who don't have a pot to piss in, getting rich overnight on this stuff, and they're going to get creamed.
Okay, that's good. Now, Jerry, what do you think about that?
Well, I agree with him on the Bitcoin. I'm seeing it personally right here every week. As people say they're going into, people I play golf with ask me about it. And when I try to explain it, they don't understand it, but they're interested in it. So how can you put money into something you don't really understand and there's no
history of it? Value. There is some value to gold.
That's right. There's nothing behind it.
I
was reading about the tulip bubble in the 1600s, and you know what really burst that is the Dutch created a futures program where they could actually trade the price of tulips. No tulips actually traded hands. It was the futures that did it.
So Harry, are you also predicting a crash of the cryptocurrencies? Do you think that's going to come crashing down?
I'll tell you how much. 90%, give or take a few percent. That when something bubbles up this much, the internet bubble went up much faster than the NASDAQ bubble in a short period of time. And when the NASDAQ bubble crashed 78%, it crashed 93%. Most of that in 1 year and half of that in the first 3 months. Most bubbles see half of their total crash in the first 2 to 3 months, and then most bubbles, when it's a bubble, don't crash 40, 50, 60%. They crash 70, 80, 90% or more.
Right.
This Bitcoin thing is going to die a horrible death, and it's going to be the leading indicator of the entire stock market and all these other bubbles. This is the last bubble of all the bubbles. My question to you, including Treasury bonds, and what hasn't bubbled in the last decade or two? What hasn't bubbled to extremes compared to history? And bubbles always burst. When people say, Harry, something can't go down 80%, well, commodities are already down 60, 70, 80%. What bubbles always burst when people say, this will be different. I say, well, you show me one bubble that looks like this, looks exponential, I'll give you an example what a bubble looks like. The Masters and Johnson's male orgasm chart. That's exactly what a bubble looks like. The 1950s and 60s stocks were not a bubble, just a strong bull market. This is a bubble, and everything, including gold. When these bubbles burst, gold will be one of the first things I'll buy because it is scarce. I like what Jerry says about it. It is scarce. Metals, we've seen a big commodity bubble burst like it did in the 80s. Every 30 years this happens. And this commodity bubble has burst the fastest, it'll be one of the first to turn around. It'll be led by emerging countries who, as Jerry said, are the biggest commodity consumers, especially gold, India and China. It'll be the first to come out. I think gold will be 4,000 to 5,000, but I'd probably be dead by then. So I'm not.
Okay, so listen up right now. So we've had Harry Dent calling for gold to go to 400 to 500, and we have Jerry Williams, dear friend of mine. We're the old timers in gold. Gold's going to go to 5,000, and we have Jim Rogers a while ago called gold to bottom at 1,050, and Jim Records at $10,000. But the most important thing is what the heck is going on. So when we come back, we're going to find out what's really going on underneath all these bubbling effects. But the most important question, after you understand that, the question is, what are you going to do?
You're listening to the Rich Dad Radio Show with Robert Kiyosaki.
Every business owner and real estate investor needs asset protection. Entities like LLCs, S or C Corps are vital to protect yourself and your business. Let Corporate Direct guide you through the process of forming a corporation or LLC. Corporate Direct is owned by Rich Dad advisor Garrett Sutton and is Robert Kiyosaki's choice for corporate formation. Mention Rich Dad and receive $100 off a formation. Call 800-600-1760. That's 800-600-1760. Or visit online at corporatedirect.com. That's corporatedirect.com.
Log on to richdadradio.com while you listen. Now back to Robert Kiyosaki.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And today we're talking about gold. Is gold going to go to 10,000, as Jim Rickard says? Or is gold going to go to 500, as Harry Dent, our guest, says? And then we have Jerry Williams, who's calling for $5,000 gold. And another person I respect is Jim Rogers. And when gold went to 1,900, he says his real price is 1,000. So, every idiot jumps out there and runs into it and chases the price, but not understanding the underlying. And today the bubble is, of course, in Bitcoin. Everybody's jumping in. Everybody's jumping in. But we have to understand the underlying, and then once you understand the underlying economic forces are going on, you have a better chance of making a decision rather than being an idiot and jumping in. But now we have our other guest, Harry Dent, who's calling for it to go to 400 to 500. So the Rich Dad Radio Show, you can listen to anytime, anywhere on iTunes or Android. All of our programs are archived at richdadradio.com because we believe in education. Listen to this program one more time. You'll hear stuff you've never heard before. And then also we archive it at richdadradio.com so that you can have your friends, family, and business partners, those with all those fixed mindsets especially, and no growth mindset people, to listen to this program and discuss it. Because it's in that discussion there's possibly some growth, unless you're talking to some of my in-laws who have fixed mindsets.
Hey, that's my family.
Well, I have other family members too. We all know people who have closed minds. I mean, that's what it is. So the Rich Dad Show here is having two friends of mine, Harry Dent and Jerry Williams. Jerry Williams is a gold dealer. He's a founder of American Precious Metals. He bought his first gold in '72. His website is apmaz.com. And Harry Dent, he has great books, because every time I read these books, I have to think for hours after reading them.
Well, he's called a lot of things right.
Yeah, but it's not so much he's right or wrong, but what is his underlying philosophy on this call? It's not whether he's right or wrong. I want to know what were the things what was the assumptions? What does he see that I don't see? So that he's also the editor of the free newsletter, Economy and Markets. His website is one word, harrydent.com. So I agree 100% on Harry that we're on the edge of Armageddon. Now, we might not be, but I think we are. And I have different indicators, what I'm watching, what I'm tracking on the underlying. So let's start with first. Let's give Jerry, because he's older than all of us. Not really. Jerry. So what are you watching on the underlying indicators? What are you concerned about, and why do you think gold's going to go up?
Well, we haven't identified this other bubble yet. We've talked about a lot of them, but the biggest bubble, I think, is the U.S. dollar. And, of course, bonds, which are the same thing. And so if we lose our status as the world's reserve currency and as a petrodollar, then the dollars are going to collapse. That's where gold will go up, because why would you want to hold on to a depreciating currency, whether it's Zimbabwe, Venezuela, or wherever? That's why I like gold. It's more than a commodity. It's a currency, and it's the only commodity that is a currency.
Okay.
So you
think? What are you going to buy with it, Jerry? Are you going to buy a loaf of bread with a Kruger in? What do you mean it's a currency?
Well, a lot of people say that. You could split that up and buy 75 ounces of silver with the same amount of money.
You'd have to have a pretty sharp knife.
Right. So, you'd have some smaller type of instrument. You might buy some kind of new currency in exchange for your gold. But I think in terms of the number of loaves of bread, a suit, a pair of shoes, or a car, or gas, I think the gold will hold its value regular to those other items that you're going to need.
Okay, so Jerry, you're and I agree with you too. I watched the bubble in the dollar, but again, so that's just our point of view on this thing. And so, Harry, what would you say are the biggest? Let's start talking also what you see the indicators are, or the flaws are, or the which pillars are going to collapse first, and then I want you to talk about where you would go, because I think you're calling for it to go into bonds in the dollar. And Jerry is saying that's where not to go, right?
Yes, and not forever, more near term in the crisis. Number one, the dollar collapsed from 1985 to January of 2008 in the greatest boom in history, because we printed so many dollars and so much debt around the world. The dollar went down in value 60%. The dollar's not overvalued. It's not in a bubble. It's only in a bear market bounce.
So
the dollar's not in a bubble. Nothing like gold. Gold was a bubble.
So Harry, you're saying that rather than keep your money in gold, keep your money in the dollar.
Yeah. My question is, when Lehman Brothers was going down the tubes, what did better, gold or the dollar? Just answer my question, Jerry.
Oh, gold did.
Gold went down 33%, dollar went up 27%. That's the answer.
Oh, but gold went from in '08 from 1,000 3 years later to 1,900.
Yes, because governments printed massive amounts of money to get out of that great downturn, which was becoming a Great Depression, and gold bugs and investors thought that's going to create hyperinflation. It didn't, because we're not in an inflationary time. Okay, let me give you my biggest.
Wait. All you're saying is,
give me my biggest. Gold, long term, and show me wrong on this, correlates with one thing and one thing only: inflation. Inflation, in my underlying fundamentals in modern times, correlates with workforce entry. Young people are inflationary. They cost everything to raise and enter the economy. Then they become productive, drives down inflation, and when they die, they're deflationary because they die.
Right. Harry, let me interrupt. So I would say your strength is that you're a demographics guy. I mean, you watch.
No, I'm a cycle guy, and demographics is one of the most important cycles I've found. But demographics was not as important.
Wait, but Harry, hold on. You got to explain, for people like me, what does demographics mean to you? Because the thing I say, I agree with you. Demography is destiny. If you watch demographics, you can see the future. Just like people could see the baby boom coming.
Yeah. But the Bob Hope generation, the baby boom, were the first two generations to have middle-class living standards and where the everyday person counted for the first time in history. Back in the good old days, when gold was king, people were peasants, and everyday people didn't matter much. So demography has always been important, but it became much more important. And demography has two big components among many. One is when people grow up and raise families, they spend the most money. That causes boom and bust cycles with generations. The second thing, people enter the workforce, as I said earlier, they're inflationary, and when they exit and retire and die, it's deflationary.
Which we're in right now.
Which we're in, the baby boomers
are retiring,
and then they're going to die in massive numbers.
No, Harry, don't tell me that.
Robert, will never go up again when more baby boomers are dying than young people.
I understand. I just want people to understand your logic here, because what you're saying, when the baby boom, which was 1946 to 64, entered the market.
No, but Robert, they're wrong about that.
Wait.
Demographers are wrong. It's 1937 to 61 the rising tide of the baby boom. They're taking above average births. That's meaningless.
Okay. Harry, fine. I just, we're not here to argue the facts. We just want to argue the trend.
No, facts are important, Robert. I only deal with facts, unlike Donald Trump.
I understand.
Can I get a question?
I understand. Let's keep it simple, because Rich Dad here, we're not going to go into the numbers. So the baby boom came in. There was a slight dip, and then the biggest boom hit because we were growing up, we were spending money and all this. But now we're about to exit. That's what you're saying, right?
No, Robert, let me be precise about it. On a 46-year lag for the provable, documentable, factual peak in spending of the average person in this country in 47 in Europe and Japan, on that lag, we had a boom from 1983 to 2007.
Correct.
That boom went down, as I said, 20 years earlier, and we've been living on printed money ever since to make up for it. And that's why gold went up at first, because they're saying, my God.
Harry, I agree.
But I do have one question, because you're talking about the baby boomers. And so we've had other guests who say, well, the millennial market is going to be bigger, and all of that consumer spending is going to come back.
Well, let me talk to them, because they don't have the facts.
Okay.
The millennial generation in the United States is one of the biggest of developed countries, and it only brings us back decades from now where the baby boomers took us in peak spending, home buying, car buying, everything. They are not a bigger generation. There are more numbers because they started at higher levels. They are not a larger generation. They're only half the wave as a generation as the baby boom. So these people, the same ones that say 46 to 64, don't know the facts.
Okay.
Well, I think can I get a question in here?
Yeah, Jerry, please.
We're talking an awful lot about the ebb and flow of consumers worldwide, causing these prices to go up and down and as panics. Most people don't realize this, but 2/3 of all the gold that was ever put on this planet, or from our mind, is in government vaults. Central banks own it. Central banks are still net buyers of gold. Why do they do that?
Jerry, have you ever been to India? No, most of the gold is bought not by central banks. It's bought by Indians and Chinese, and that's why I'm bullish on it long term.
Well, the government of China is the entity that buys
Okay, wait.
gold.
So Harry, and just let Jerry give his point of view.
Jerry's
You don't
talking.
have to. I know. I'm just asking.
You told me to step in, Robert.
No, I'm just asking you to give him the right to give his point of view.
Well, here's another thing most people don't realize. When Lehman and Bear Stearns went under, they had huge short positions in the metals. They were short. They were.
What does that mean, Jerry? The average guy doesn't know. You know, the average guy's not Lehman or.
Well, one of the reasons that gold had gone from to 1,000 down to 700 and popped back up to 1,000 by the time the housing crisis happened. You know, they were short. In other words, they had a position that they could not deliver on, and they had already sold it.
Right.
So
they didn't have any gold, is what you're trying to say.
That's correct.
Okay, good. Jerry, we're speaking to average people here today.
Well, I think everyone can understand if you borrow something and sell it, you gotta pay it back.
Jerry, we just want you to give your point of view. Harry will give his point of view. I'll give my point of view. And Kim will decide who is the open mind or the fixed mind. We'll be right back.
Okay, well, there's this.
No, we'll be right back. That's enough. Thank you.
All right.
You're listening to the Rich Dad Radio Show with Robert Kiyosaki.
Robert Kiyosaki's Rich Dad Advisors have a great gift for you. Visit RichDadAdvisors.com and receive 5 free reports on business and investing success. 5 free reports that can help you right now. And while there, check out the Author's Choice audio series. Audio is a great way to learn. And for as little as 99 cents, you can download key chapters from all the Rich Dad Advisor books. You can listen to The Myths and Magic of Real Estate Investing, 7 Steps to Limited Liability, The 4 Pillars of Investing, Team Code of Honor, or The Psychology of Debt, among other great audios. For pennies, you can power up your skills for getting out of the rat race. So please visit RichDadAdvisors.com for your 5 free reports and your powerful and affordable audio chapters. That's RichDadAdvisors.com for great information that can help you right now.
This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, and today we're talking about a very, very important subject. It's not in the big picture of things. This is the theme of the show. Okay, we have God's money, which is gold and silver. Gold is atomic number 79. Nobody made that but God, and silver is atomic number 47. Then you have government money. It's called fiat currency. Fiat money simply means the government says it's money. The reason the U.S. dollar is important to the U.S. government is we can only pay our taxes in fiat dollars, the U.S. dollar. You can't pay in chickens, you can't pay in gold, and you can't pay in Bitcoin yet. Then we have cyber money, which is I call people's money. It's decentralized money outside the central bank system. So we're in the biggest change in world history, and everybody's got a point of view. So my recommendation is I always talk to people who know something, because most people know little. So I've been researching Bitcoin a lot. I bought 5 coins the other day just to understand it. And, I'm already a multimillionaire, just 5 coins. But anyway, I also bought gold in 1972 at $50, and back in 72 it's going to go to 100. But most people don't know this. I was now a criminal because I bought the gold in Hong Kong. Americans weren't allowed to own gold. So here we are, the biggest change in world history, and I think my opinion is the dollar is the problem, but who knows? So our guests today are Harry Dent. He's an economic forecaster. His newest book is 0 Hour. Turn the greatest political and financial upheaval in modern history to your advantage. Came out in 2017.
And if you go to Harry's website, it's harrydent.com, and he has a free newsletter called Economy and Markets. Highly recommend it.
And I would listen to what this man has to say, because his what he watches is not what I watch. So that's why I have him on the program, because I want to know what he's watching. Our other guest is an old-time friend, Jerry Williams, founder of American Precious Metals. His website is apmaz.com. And Jerry's calling for gold to go to about $5,000 an ounce. And he has his points of view of why he thinks that's going to happen. And as I said, Jim Rogers of George Soros' former partner in the Quantum Fund when gold hit 1,900, he called for gold to be, the real price of gold to be 1,000. Now, he had his point of view. He's a technical trader. And then we have Jim Rickards, who was both men are guests on our program, and Rickards is calling for $10,000. And then we have Harry Dent, who's calling it to go to 500. And so Kim is going to explain again fixed mindset and growth mindset.
Well, at the Rich Dad Radio Show, we want to give all points of view. And when you give all points of view, you got to have an open mindset to really be able to listen. If you have a fixed mindset that says, no, I'm right, and I know all the answers, you're not going to learn a darn thing.
So let's start with Harry. I highly recommend you get his book, 0 Hour, because you can go into more depth of what his fundamental underlying reason, which I wanted to hear today. But Harry, what is a solution? What is your solution for people who suspect you're correct? We're in deflationary times. Let's say that gold goes to 500, dollar crashes, stock market crashes, real estate crashes. Where would you go?
You'd be in safe assets. In the Great Depression, where everything went down, commodities, real estate, stocks, that's what happened. You have a bubble in everything, and then everything goes down to reset. It like Jim Rogers said, gold went to 1,900. It should have been 1,000. Well, things go way above fair value, then they go way below, and then they go back to fair value. And so we're just going to have a big reset. So what you have to do is be in things from cash to safe bonds, high-quality bonds, and U.S. Treasuries are the highest quality bonds in the world. It's not Germany, which is way overpriced in bonds and undervalued in yields. Germany's got the worst demographics, second only to Japan, ahead, and nobody saw the Japan crash coming because they didn't look at demographics. Nobody's going to see Germany and Europe implode like this. So the dollar is just the best house in a bad neighborhood. We have better demographics than Europe, Japan, and even China, our major competitors. We have created less printing money than Europe and Japan compared to our economy, so we're just less bad. We're not good. We are devaluing our currency, but not as much as others, and currencies trade versus each other. Gold, stocks, bonds have a value that somebody like Jim Rogers can say, hey, look, gold should be about $1,000. You can determine that based on supply and demand and historical trends. You can't do that for cryptocurrencies. They have no value until they establish themselves. And you can't do it for currencies. Currencies trade relative to each other. The dollar is the best house in a bad neighborhood globally.
So Harry, just keeping it basic, because most of the listeners at the Rich Dad Radio Show are like me, we're just students. How would you be buying dollars and bonds? Because that's not what I do. Okay.
You can buy a dollar bull fund. There's many of them. You can buy UUP, which is an ETF that tracks the DXY, the dollar index, which has done nothing but go up most of the time since the crisis started in January 2008. In boom and bust, printing and not printing money, and the dollar has tended to go up and it's had little downside. It's the safe haven. I'm not into the dollar forever. I'm into it until it gets back to fair value after falling 60% in the 80s and 90s and 2000s. You get into bonds, I think when they go a little higher, at some point, Italy's going to blow up. And then all sovereign bonds are going to have a reckoning saying, oh, my God, what's Germany doing yielding 2%? And Japan bonds, which are bankrupt, yielding 0% 10-year, when Italy's blowing up and governments can start to have problems, not just corporations and stuff.
So how would you buy the U.S.
bond? When bonds go up in
bond?
yields, I would buy them. I'd buy the 30-year treasuries and the AAA corporate bonds, because those are the two things, along with cash, that went up in value in the Great Depression in the worst decade in all of history, where gold was flat. And you can't judge gold then, and I'd give Jerry credit on that, because gold was fixed by the government. So that's a disadvantage. But all assets went down except for high-quality bonds. And cash goes up in value, even though it isn't worth more. It's worth more because it will buy more of everything. So you want to be in high-quality bonds, the U.S. dollar, which is going to be the reserve currency for years to come.
How would you buy high-quality bonds? What's your recommendation of that for the novice like me?
Okay, TLT is an ETF that tracks 20-year Treasury bonds, a combination of 10 and 30. But you can buy 30-year Treasury bonds. The longer the duration, the greater they're going to go up when deflation sets in and rates go down even further. I think rates are going to bounce on the 10-year Treasury, which is my benchmark, from 2.4% today to maybe as high as 3%, then I would buy them and watch them go down to 1% or lower. You're going to get 3% yields, better than stocks. Stocks are going to crash even if you get those 3% dividends, so you're going to pay for that dearly. And the bond's going to go up in value because nobody's going to want a 3% bond when rates are down. I mean, they're going to want that 3% bond when rates are down at 1%. So that bond could double in value while you're getting paid 3%. That's what happened in the Great Depression.
And do you cover that in your free newsletter, Economy and Markets?
Yeah.
And your website is harrydent.com.
Yeah,
and
that's what I heard.
Just a real basic. I just have a basic question, Harry, because you say gold does well, with inflation, and we're in a deflationary period. This is a real basic. Why is government so hell bent on keeping inflation up? What are they so afraid of deflation for?
Pay off the debt.
Well, they hated inflation in the 70s, and gold was the best investment in that time. They hated inflation when we're going in one direction. Now that there's deflation tells you throughout history, you don't get deflation but once in a lifetime like the 1930s. Deflation means debt bubbles and financial asset bubbles are deleveraging. Money is disappearing at the speed of light. Less money chasing the same goods means deflation, and you're in a depression. Nobody wants. No president, premier, or central banker wants to have the Great Depression on their watch. So they're printing money feverishly to fight deflation. And even though they're doing that, $12 trillion and rising, inflation's still at 0, 1 to 2%. We're the highest in the developed world, 2%
Right.
here. I mean, everybody wants 2% inflation now. People would pray for 2%. Japan's praying for 2% inflation. They can't get it.
Once again, it's Robert Kiyosaki of the Rich Dad Radio Show, listening to two great people. Harry Dent, he's the economic forecaster, and again, he's calling for gold to go to $400 to $500. And our other is my great friend Jerry Williams, American Precious Metals, and he's got his point of view on gold. And ladies and gentlemen, at Rich Dad, we don't make recommendations. So Harry had some recommendations on certain ETFs and things like that. Rich Dad does not agree or disagree, but that's his point of view. And once again, you can listen to the Rich Dad Radio Show anytime, anywhere on iTunes or Android, and all of our programs are archived at TheRichDadRadio.com. I suggest you listen to this program again, in case you missed what Harry's logic was and his recommendations are. They're not my recommendations, Rich Dad's recommendations. Those are his recommendations. But I think you should have your family, friends, and business partners listen to this, because as Kim's talking about, you either have a fixed mindset or a growth mindset. And the people who have fixed mindsets, I would think, are going to get wiped out. So that's why we have the Rich Dad Radio Show. So, Jerry, what's your point of view on what Harry said?
Well, I'm looking forward to that 30-cent a gallon milk and that $1.25 gas that we're going to get when we have the $700 gold, because it's not going to go down by itself if the whole
So
price.
you're calling for inflation.
You might get the $1.25 gas. That's all. I'm not.
That's a good point, Jerry.
Yeah, I can see the logic in what he's saying.
I can too, Harry. I agree with you.
Yeah, the thing about Rickards' prediction is all you have to do is simple math. You just take all the gold that's out there, all the money that's out there, and you divide by the amount of gold that we know is held in vaults, and sure, you'll come up with $10,000 an ounce, but that doesn't mean it's going to go there. I can see a $5,000 gold price. All it takes is a whiff of smoke, another major bank collapse of some kind. So markets are fickle.
Yeah, it's just it's going up and down. It's gyrating. And that's why I wanted to know what your point of view, Jerry, is on the underlying and what Harry's underlying is. And I agree with both you guys. I'm concerned we're going into depression because of hyper printing.
Well, that's the definition of inflation, isn't it, Robert? It's excess creation of money.
Right.
It may not reflect itself in the price levels immediately. It takes time to work through.
So Jerry,
like
how?
9 years?
So Jerry,
9 years?
Jerry, would you buy bonds?
Well, no. I think interest rates are going to kill the bond market. And by the way, the bond market is one of the biggest bubbles right now.
It is.
Yes, it is. And I think you're going to see an inverted yield curve.
All right. So Jerry, for the average guy like me, what do you recommend?
Cash. I think Harry's absolutely right about the cash part.
Wow.
Cash is king. You can do anything with it. As you know, you can pay your lawn service. You can buy a car. You can buy gold, or you can just sit on it and wait for the price level you want.
Right. So the biggest point, ladies and gentlemen, we should have the Rich Dad Radio Show, is that you can listen to different points of views. I think we're saying the same thing on the underlying. It's just our solution of what we do is different. So if we're almost out of time, so let's end with Harry. Could you take a couple of minutes and say what you want to say, but more onto how to look, what you're looking at and what you're concerned about.
Well, bubbles just go until they burst, and this bubble has been ignoring every bad news. I mean, and including Donald Trump. I'm sorry to say, Donald Trump's a crazy man. He just is, and he was known to be that. And the markets were expected to go down if he got elected by surprise, and they went down the night before, and then they went straight up, and they've been up ever since because they're thinking they're going to get another free load of money. They're going to get tax cuts on top of 8 years of zero interest rate policies and $12 trillion pumped into the global economy, which only benefits corporations and lower borrowing rates and higher stock prices. And companies now, the biggest net buyers of stocks are, guess what, who they are? Companies buying their own stocks with cheap money provided by the government. The stupidest something-for-nothing scheme in history.
And can you explain that, Harry, just real quickly to the average person? What does that mean if they're buying back their stock? Why?
Okay. They buy back their stock because it decreases the number of shares, which means the earnings per share goes up even if their earnings are flat. And most companies are not growing that much, and the economy has been growing only 2% for the last 8 years, despite massive money printing, which any other time in history, in the 80s or 90s or the 70s, would have caused massive growth and hyperinflation, by the way, what the gold buzz are expecting.
But what you're saying is the guys who run the big banks and all this, they got richer, but the little guy's getting crushed right now.
Of course.
So this one more time, Harry.
Have money and invest money, and the average person doesn't have much money to invest.
But your recommendation for the little guy like us who have a few bucks, where would you put your money again?
Again, cash, U.S. dollar. Increasingly over the next year, I would wait on this, and high-quality bonds. And then when things crash, you start buying things in succession. I think gold and commodities and emerging countries that have strong demographics, unlike most of the developed world, are going to be the first to come out of this. Real estate will be the last because real estate takes longer to crash. Look at the last crash. Stocks hit bottom in a little over a year and a half. Real estate took 6 years to hit bottom. So real estate be the last thing you buy, but you start buying emerging markets, commodities, especially the metals, because like Jerry said, they're scarce. They aren't making any more of this stuff. You can keep growing crops and cattle. You can't grow gold.
So if gold goes to $450, Harry, are you a buyer of gold then?
Absolutely. That would be one of my we're saying in the book that the precious metals and the industrial metals are the first thing you would buy for the next great commodity boom when emerging countries drive the world, because emerging countries both produce more commodities and consume more than developed countries.
Thank you, Harry. So the book is called 0 Hour. So Jerry, your final words on this whole thing and what you recommend the average person do? And again, Rich Dad does not recommend or
endorse. It may sound like a broken record, and I may be a dinosaur, but ups and downs will happen. If you don't have 10 or 15% of your portfolio in gold, it's like we're running along without any life insurance. I mean, eventually you're going to wish you had it.
What you're saying here is this, that the major countries such as China and Russia and the U.S. are starting to hoard gold, and there's only so much free or real floating gold out there.
Oh, yeah, and they're not just starting. They've been doing it all along.
I know.
They love these low prices. In fact, if I was a conspiracy theorist, I would say that they may have something to do with keeping these prices low on paper so that they can buy it physically.
Yep. So they suppress the price so they can buy and put it in the vault.
And they have the power to do it, Robert,
Correct.
And the money.
I know that. So what's your recommendation for the little guy on gold?
Well, the little guy needs to get started, even if he just buys an ounce. Something, at
so
this level.
That's about $1,500 today.
Yeah,
$1,500 they can get started.
Oh, less than that now. Yeah, we're around $12.35 an ounce at today's market.
Yeah, but you got to have your markup there, Jerry.
Not on GLD, not if you buy
Harry, that's a whole other story. We're going to paper gold. So anyway.
No, don't do that. If you don't own it, you don't. If you don't hold it, you don't own it. That's my philosophy.
So Harry, Jerry and I are the old gold bugs. I don't like GLD or SLV because I want real gold, not paper gold. Anyway, I want to thank the two of you, man. It's been fantastic. I hate to say this, but I agree with both of you of the underlying.
Great. They make strong
It's just
points.
what we watch different things because nobody's God. Nobody can see everything.
You got to diversify.
And everybody has a different solution. So I think
Not even Donald Trump?
no, he is God. I think he told me.
No, you got to give some exceptions.
That's right. Hey, Harry, thank you.
Harry.
I have followed you for years. I love, it's not so much what you say, but it's why you say it that is important. And Jerry, thank you for all these years of the information. So those want more information, Jerry is at apmaz.com. He's the founder of American Precious Metals. And Harry's website is harrydent.com, and his free newsletter is Economy and Markets. Thank you, guys.
Thank you, Harry. Thank you, Jerry.
Thank you,
Jerry.
And then when we come back, we go to the most popular part of our program. It's Ask Robert.
You're listening to the Rich Dad Radio Show with Robert Kiyosaki.
Every business owner and real estate investor needs asset protection. Entities like LLCs, S or C Corps are vital to protect yourself and your business. Let Corporate Direct guide you through the process of forming a corporation or LLC. Corporate Direct is owned by Rich Dad advisor Garrett Sutton and is Robert Kiyosaki's choice for corporate formation. Mention Rich Dad and receive $100 off a formation. Call 800-600-1760. That's 800-600-1760. Or visit online at corporatedirect.com. That's corporatedirect.com.
It pays to listen. Now back to Robert Kiyosaki and the Rich Dad Radio Show.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. Today's show is about gold, but it's really about this thing called money. What is it? And since I've been a little boy, I was wondering what money was, because they don't teach you this stuff at school. So we had two great guests today, Harry Dent. He's an economic forecaster. His newest book is 0 Hour. And Jerry Williams, founder of American Precious Metals. And what I want, it's not gold. I want the information. I want somebody who's in there every day of his life. And that's Jerry. He understands gold. And Harry Dent, his is economy and markets, harrydent.com. He recommends dollar and bonds. And I don't touch those things because I'm in a different situation. Once again, Rich Dad does not make any recommendations. We want you to think for yourself. And everything, like with cryptocurrency today, you have to ask somebody who's in there every single day, not your brother-in-law who's mowing the lawn and buying cryptocurrency. That's ridiculous. So you got to understand the teacher. Who is your teacher? The reason I went to a rich dad when I was 9 years old, because my poor dad, PhD, knew nothing about money. Why would I ask about money from a poor man? And that's what most people are doing. That is my point of view. So Harry and Jerry and I agree on the same thing. We're possibly heading into a depression. And you're counting on job security like your dad did? That's ridiculous. My dad had no job security. Kim's dad had no job security, but they couldn't change their mind. They don't know what to do. What happens if I lose my job? So Kim and I ask ourselves that question, what happens when we lose our job? Well, don't need a job. That was our solution. But most people, if they lose that paycheck, they're screwed. They're screwed. What happens if the stock market crashes and their retirement fund goes to zero? They're screwed. But they didn't want to keep an open mind, right, Kim?
Well, that reminds me of that. I think the definition of intelligence is the ability to hold two opposing points of view and still function.
Yeah. So one guy says going up, one guy says going down. What's your point of view on it? Yeah. So anyway, submit your questions to AskRobert at richdadradio.com. And again, we don't recommend anything. Harry says buy bonds. I don't want to do that. And Jerry says buy gold. I buy gold. I also am now a Bitcoin billionaire because I bought 5 Bitcoins. And in 5 years, they're going to be $1 billion each. If you believe that, buy Bitcoin. First question, Melissa.
Our first question today, Robert, comes from Blake in Los Angeles. Favorite book, Rich Dad, Poor Dad. It says, what is your opinion on gold? Is it worth investing in? And if yes, how would you invest in it? Physical, mines, or ETFs?
That's a great question, but you got to answer that question for yourself. I don't trust ETFs because they're paper gold. It's called the fraction. If you understand money, all money is on a fractional reserve system. A fractional reserve system means I put $1 in the bank lends out 10. So I put those 10 coins in another bank, and they lend out 10 more coins. So now your $1 is now worth $100. The same with gold ETFs. There's approximately, for every 1 ounce of gold in an ETF, there's 100 claims, which are gold ETFs, against that 1 ounce. So everything's fine as long as nobody wants that gold. So that's why Jerry says don't touch those. He didn't say it directly.
Yeah, he
But
pretty much did.
Yeah, because if all of a sudden, let's say the price of gold is, let's say Jerry's correct or Ricketts is correct and gold goes to 10,000. Everybody's going to go, oh, God, I want my gold. I'm going to do something else with it. They can't produce the gold. It's called a fractional reserve system. So that's why you have to study. So I don't have ETFs and I don't do miners because miners are leverage upon leverage. I want the real gold. Kim and I have real gold hidden in vaults far away, and you'll never know where. And we never spend it, right, Kim?
That's correct. And if you listen to this program, Jerry's all about physical gold.
Right.
And even Harry, he mentioned GLD, the ETF, and even under his breath, he kind of said, well, yeah, that's right. If you go cash them out, you may find the gold's not there.
Yep. That is the banking system.
Yep.
Next question, Melissa.
Our next question comes from Gerald in Minneapolis, Minnesota. Favorite book, Rich Dad, Poor Dad. He says, what do you understand about digital currency? And in your opinion, is it real or is it a fraud?
Again, my answer is always the same. You better find somebody who's actually trading and who's actually making it or mining it, as they say. So we've already had one program on cryptocurrency, but we're going to have another show, another friend of mine, and we're going to have several shows on this thing called cryptocurrency because this is basically invisible money. But the main reason stepping back on the big picture, is the main reason the Rich Dad Radio Show exists and the Rich Dad Company exists is back in 1972, as Jerry and I were talking about, we understood that the dollar became fake money. They took the dollar off the gold standard, Nixon did. And they could print as much money as you want. And yet people are idiots. They're still saving money. And as Harry Dent says, they printed 12 trillion all around the world. The Japanese right now are still saving money. And the Japanese are very smart people, but they have no financial education. I was just in Japan, lovely place, lovely people, my heritage. But they're still working hard and saving money. You got to change your ideas, man. Why would you work for money when the government of Japan has interest rates below zero? Oh, no, I got to save money. So why is that? Because I have a fixed mindset. Because I'm doing the right thing. And that's what this program is about. That's why I had Jerry and Harry Dent on. They said the same thing, but had different solutions. Comments, Kim?
Well, Gerald asked, is it real or is it fraud? And every realm of investing, there's real and fraud.
We're going to have two guys on this program, actually four guys. My accountant, Tom, will be there because he was with me when we were getting educated on Bitcoin, but more than that, network marketing on Bitcoin. So I'm not endorsing it, but I do what I practice what I preach. We sat there with these two guys for 2 days educating me. I still don't understand it. But I now have 5 Bitcoin, which is now worth $5 billion.
And you make a really good point because we talk to people who are doing it every day. And a lot of people, they're getting this, like Gerald's probably getting a lot of his information from the media.
Or from his best friend or his
media talks
guys
about,
at work.
Bitcoin was hacked. Well, Bitcoin doesn't get hacked. The exchange where you buy and sell gets hacked. But you got to get educated. You got to listen to other points of view.
And educated, I mean, don't talk to stupid fake teachers.
Teachers.
The problem with academia is filled with fake teachers like my poor dad. They don't know much, but they're A students. They have right answers, but they're terrified of making mistakes. So they just do as they're told. They're like Fido, good dog. Here, Fido, do this, do that, roll over, bark. That's what happens when you go to school. Now, education is important, but you don't want to turn into Fido. Today, Fido is called FICO scores. Today, FICO and FIDO are the same thing. Oh, I have a high FICO score. Well, what does that mean? I have a high FICO. They don't know what they're talking about. So the Rich Dad Radio program is here to save your soul. And listen, and next time you listen to somebody, ask yourself, if it's your brother-in-law, a guy at work, a woman at work, yeah, you should buy Bitcoin. Well, what do you know? I don't know. I'm just as stupid as you. I just bought it, though. But they want you to buy it so they can feel comfortable. So that's why today I'm very happy we had Harry Dent, economic forecaster, and Jerry Williams. They both said the same thing. If you listen to the underlying thoughts, we're going into a depression. We're fighting deflation. But what you do about it is up to you. That's why you listen to two people. Comments, Kim?
No, I would listen to this show again because Harry talked about all these different bubbles that are going to come crashing down. And
Harry's saying the same thing.
He's saying the exact same thing. And Jerry's saying the same thing. I would listen to this show again, though, because there was a lot of information and really good information.
Right. So once again, thank you to Harry Dent and Jerry Williams. Submit your questions once again to AskRobert at RichDadRadio.com. And thank you for listening to this program.